What's up, everyone? All right, in today's episode, I'm going to give you my watch list for Monday morning and the game plan for the week ahead. Now, Monday will be day 9 of my small account challenge, trading in an account that I funded with $2,000 using no leverage. As of day 8, the account was at about $4,500, so it's up 132% from the just under $2,000 starting balance, which is good progress, although a little bit slower on really 2 accounts. One is I'm not using 6 times leverage, so the growth is 1/6 as fast as my last challenge. But secondly, and this one's really more significant right now, the market's been a little cooler. Now, it's interesting because on the one hand, we've been seeing some big moves, but we're sort of in between sectors that are hot. So 3-4 weeks ago, and for the majority of the year, the sector where we've seen big moves have been stocks that have had headlines tied in to crypto treasury strategies. A private placement for a crypto treasury strategy, and that has been the ticket for a stock to go up 500, 1,000%, in some cases, even higher. However, we have also seen that headline has been abused a bit by companies that try to kind of just tag on to what they hope will be people jumping onto their stock because they put out a crypto headline. But in essence, there's really no substance behind it, and the stock ends up failing dramatically, which makes people a little bit skeptical about buying the next one of the crypto headline. So after a couple of pretty epic fails in the crypto space last week and the week before, things cooled off a little bit. And what rose from that were biotech stocks. This is always kind of our safe place, is a biotech stock with a really good headline, because this is where we'll end up seeing stocks make huge moves. And unlike the crypto space, a biotech stock with clinical trial results or FDA approval, I mean, this is, pretty objectively good news. This is great for that small company. This could be a game changer for them. So the biotech space has always been a space that works well when it works, but it's just, you don't get a FDA approval every day of the week. Whereas this year, it seems like almost every other day, we're seeing a really good crypto headline. Okay, so as we're kind of repositioning here, there's this question of, all right, is biotech gonna work? Does it work every day? Is it just a couple times a week? And I think that's what we're sort of struggling with, is figuring out, where to focus our attention in the market. So while tomorrow will be day 9 of my small account challenge, it's also day 4 of trader rehab. Okay, so if you've been tuning into my daily recaps, you know that last Tuesday, I took a huge loss in my main account. Yes, while I've been doing the small account challenge, I've also been trading in my main account, which is difficult to trade in 2 accounts at the same time, although I've done it before. And so in my main account, I took this $173,000 loss last Tuesday. I did the recap and I said, all right, well, coming in Wednesday, I'm going to be in trader rehab. I'm going to have to discipline myself to trading with smaller size, A-quality setups, stocks that meet all 5 pillars of stock selection while I work to rebuild the account. So as we sit right now, I ended up recovering almost half of the loss between Wednesday, Thursday, and Friday, which was better progress, to be honest, than I was expecting. So now that I've recovered about half of the loss, I'm in a position where I can start to take a little bit more risk going into Monday, but I still have to be careful because I am still in a drawdown. Okay, so we also have something else to contend with, which is the S&P 500. Well, in case you hadn't heard, we had a really rough day in the overall market on Friday. Well, the tweets about Chinese tariffs were firing away and the market got spooked. And this is what we often say about the market is the bulls take the stairs right here, and then the bears jump out the window or take the elevator back down. It's like we have these markets where it's a slow grind up, and then because the market is extended, valuations are high, when investors get a little bit spooked, you get this massive flush. And so that's exactly what ended up happening on Friday. So this is actually one of the biggest red days we've seen in quite some time. The last one that is as big is going back to, April in this area here, or the day after. which is when we were really in sort of the thick of this trade war with tariffs. So, there was a bit of reprieve here for 6 months, but then all of a sudden now, it's back on the forefront of investors' minds. So, and then of course there's been a lot of talk about the price of gold and this and that and the US dollar. So there's a lot of these kind of macroeconomic factors that are in play, which, on the one hand, when it comes to, real small cap stocks, you could argue that it isn't super, super significant. These small cap stocks that I end up trading, like a QNRX on Friday, for instance, these are stocks that typically have been beaten up. It's a biotech stock, pharmaceutical company that got $100 million private placement. This is typically a good headline. And the stock went from $10 to nearly $45 a share. So that kind of move can happen more or less independent of what's going on in the overall market. I mean, the overall market can be, just absolutely terrible, but then you have a company that has a really good catalyst, and so it goes up. But on the other hand, there is the theory of, sort of trickle down, and a rising tide lifts all ships. And so obviously a falling tide, all ships will, suffer a bit, and the small cap stocks are not really an exception to that. It will eventually come back down to them, especially if we go into a more difficult economic period. Not that that's where we're at after one red day in the S&P 500, but nonetheless, it's something that I've seen people talking about, and so I thought I would just comment on it. So in the very short term, do I think that this means anything really significant for, my watch list for Monday? Not really, and not for the coming weeks, but you can look at the S&P futures later today. Right now, they're not trading yet. It's still early that I'm recording this, but you can look at the S&P futures. Obviously, the market sold off on Friday, bounced up a little bit. Typically, these types of sell-offs do get a little bit of a bounce. It's an opportunity that some more active, large investors will take to buy the pullback for a little move back up. But anyway, something to keep an eye on. So, and when we look at the after hours top gainers scan for Friday, you can see that there really wasn't any big percentage movers after hours. A couple of stocks, ACON, oops, I got to link the chart up. So ACON, this one, but I'm really not interested in it. It had this just, kind of really difficult move back on, can't remember what day it was now, but anyways, it doesn't matter. So kind of leaving that one alone. PMAX, 5 million share flow. On the one hand, you could say maybe that could work, but I think I'm going to leave that alone as well. These others, the floats are too high. FORA, the float's fine at 10 million shares, but these just aren't big gaps. So now, all right, well, the first place I look for a watch list stock for Monday morning is the top gainer scanner from Friday, because if you have a stock that was up 100% in after hours, then that's certainly something to pay attention to going into Monday. But we don't. So, all right, the top gainer scanner for after hours is off the list. Did we have anything that was a top gainer scanner just throughout the day on Friday that is worth watching for continuation? Going back to QNRX, no, it made a huge move, but then retraced it. So that's out of play. GWH, this one's interesting. 277 million shares of volume. That's unbelievable. This big rally sold off, then it comes back up in the afternoon and sold off again. So I would say that this could be something to kind of keep an eye on, some ascending support maybe somewhere in that area, depending on how you draw the line. I mean, you can kind of eyeball it, but if you really get in there and draw it out, it seems like maybe we've got some support down here. So possibly, but there's no way on Monday it's going to have 300 million shares of volume, which means Monday is going to be lower volume. And so relative volume will be lower than it was on Friday. I usually prefer trading stocks that have really high relative volume. And when it has lower relative volume, that's going to be a problem. Usually you just don't get that clean follow through that we're looking for. So my guess is that GWH is going to be off the list. SGBX, this one's safe in green holdings. We've traded it before. You could say it's also kind of holding up, but it's typically not been an easy one to trade. The daily chart does show as a green candle kind of on this rally back up. So, there's a little part of me that thinks, oh, maybe this could end up working, but it would surprise me if it did. I mean, it's not as bad as like a stock like Mullen or something like that, which is now BINI, but it just doesn't feel like it's quite worth it. And by the way, BINI, I mean, this is the stock that every time it pops up, it goes lower and lower and lower. It's unbelievable, and I'm just waiting for this company to get delisted. I just can't imagine how much longer the exchanges are going to, let them stay on the market, because it just seems, really kind of unbelievable the way they just keep selling off, and it's bad for shareholders. It's bad for the market structure to have a stock like this. So, anyways, nonetheless, SGBX isn't that bad, but it's still a little bit, just has this history that I don't really love. So that was that. And then YHGJ, that's too hard of a symbol to even pronounce. A G and a J and a Y and an H. That's just too much. Make it simple. Make it something I can pronounce. QNRX, I mean, I guess that you can't really pronounce it. STAI, but YHGJ. GJ. That should be like, they should never do a G and a J side by side. That's a rookie mistake. So for that reason alone, this one's off the list. But really, you look at the name of it, and Yunhong Green CTI Limited. So just the limited. Most U.S. companies are not a limited. They're a corporation. So then you kind of look at this and you're like, well, wait a second. What's going on with this company? Because this, almost seems like, there might be a little bit more to it than what you're initially reading. So it says it's got an Illinois address, CTI Industries. So sometimes I'll go over to BAM SEC, YHGJ, and then you could pull up a recent filing. It's likely they've done a series of splits. I'm just wondering, the China connection. Company acquire production assets in China. The company is formed wholly subsidiary in the province of China. So, for that reason, it's going to be a bit riskier. Okay, so that one's off the list. All right, now I have this new scan I've been working on, which is searching for stocks that meet more or less all 5 pillars of stock selection. The one filter that is not required is news, so 4 out of the 5. But this is helpful, but this is a stock, for example, that although it is on the list, I probably wouldn't have traded it. It actually doesn't have a lot of volume. But GWH was on it, and there were a couple others that were on it at various times. And if they no longer meet the criteria, they're back off the list. So I'm still fine-tuning this scan, but I'm trying to use this to help me find the needle in the haystack a little bit more. Even though these scans are good, sometimes they produce more ideas than I want. So just helping me try to narrow things down a little bit more each day. So I'll be watching that on Monday morning. I'll obviously be watching my top gainer scanner to see what kind of moves we have in the early session. And, the fact right now has been that most days this week or this last week that we were sitting down, even at, 6:30 in the morning, there were already stocks that had made some huge moves. So we're seeing there's definitely volume in the market. I mean, traders are getting up early, and maybe it's European traders or whatever, but we're definitely seeing some action in those early, pre-market hours, which is helpful because then when we sit down at 6:30 or 7 a.m., when retail trading sort of begins in the U.S. at 7, we already have something we can kind of work with. We can see, all right, what's the momentum today? Okay, we've already got some stocks that are up quite a bit. This is helpful. This is good to see. So that kind of helps me get pointed a little bit, in the right direction. So if I sit down tomorrow at 6:30, I pull up the scans on my phone and I can already see that we've got a stock that's, put in a big move, then I'm going to check the sector, the float, where the company's located, and see if I can get a sense of what the theme might be for Monday. And if it seems like we're still on biotech, great. If we're back, if we're just on private placements, because QNRX, no, it was a private placement. And I've said this a million times, but private placements can be really good headlines. So, whatever it is, I'm going to see if I can identify a theme. Because the faster you can recognize a pattern in the market, the faster you'll be able to capitalize on it. So that's pretty much the game plan going into Monday. I could go through the scans for low float top gainers. I could go through the scans for recent reverse splits or recent IPOs. But I don't suspect that we're going to get anything really actionable off those scans just because of the way things finished on Friday. So I think the best bet Monday morning will be using the top gainer scanner to see what is moving early. And maybe it's something that we've already paid attention to in the last week or so. Maybe it's something new. But that's what I'll be really watching. Now, those of you guys who haven't already started a 2-week trial, I'll put the link in the description for a 2-week trial. 2 weeks. We'll give you access to Day Trade Dash, the software right here. So charting, scanning, breaking news. So you'll be able to have this own installation, not just my screen share. You'll actually be able to have the software on your computer and you can run the scans and use the charts and everything on your own. You'll also have 2 weeks of access to my chat room and my live broadcast so you can listen to me while I'm trading. And you can watch as I continue to, mount this recovery here from this big loss that I suffered last week, right? So that was that big loss last week. And then that was Wednesday, Thursday, and Friday. So 20, 40, so that's 60 plus 26, so 86,000. So making a good dent, as you can see, but I'm still in the drawdown. I've still got a little ways to go. If we look over at win-loss expectation, this will show you sort of right here, this drawdown and now this recovery that, I'm working on. If we just zoom this into like the last, year to date even, it'll be a little easier to see. So yeah, so that's where we're at now. So I'm still down $83,000 since the drawdown began. So that's going to take 4 more $20,000 days. $20,000 is the daily goal. So it's going to take 4 more days to recover that. Maybe I'll be lucky and we'll have a really nice, stock that gives us some fantastic moves this week and I have another $40,000 or $50,000 day. But my goal for this week is to continue to stay focused on A-quality setups, be aggressive when something is moving, try to keep recouping a bit more of this loss in the main account, and also continue growing the small account. So small account as of Friday was sitting at 132% gain at just, it'll be right around $4,500 balance going into Monday morning versus the starting balance of $1,940. So it's pretty good. I've taken 22 trades. Part of me was thinking initially that I did 6 days in the first leg of the challenge, and in 6 days I turned that account from 2,000 to 60 grand, which is crazy. So I thought, well, maybe I'll do this challenge for 6 days. But then I thought, well, maybe I should at least, I don't know, 6 days. Yeah, okay, 6 days, 6 days, but the market's different. So maybe I should just do 31 trades. I did 31 trades during the last challenge. So I thought if I do 31 trades in this leg of the challenge, then we can kind of compare the return, trades to trade. And then the other way to do it would be to grow the account to a certain dollar amount, 10,000, 15,000, 25,000, or even to 58,000, the same as I did on the last challenge, and just see how long that takes. Doing it with 6 times leverage with 6 days, doing it with cash only. I'm on day 9 going into Monday and I'm still only at $4,500. So this could be like a 30, 40 day challenge potentially, maybe longer. So I don't know. I'm not sure. I'd be curious to hear what your thoughts and feedback might be. So feel free to leave that in the comments below. And if you haven't already checked out my small account growth strategy, I'll put a link to that episode right here at the end of this game plan. And I hope to see you guys bright and early tomorrow morning. I'll be streaming at 7 a.m. So if you start your 2-week trial later today or early tomorrow, you'll be able to sign your market data agreements and then you'll be getting real-time data tomorrow morning. All right, so make sure you check out the small account growth strategy. Thank you guys as always for tuning in. Reminder, trading is risky. My results aren't typical, so please manage your risk, take it slow, and always practice in a simulator before putting real money on the line. I'll see you tomorrow morning.